Welcome back, everyone. So today we're diving into a project that has just absolutely dominated crypto conversations lately. I'm talking about Near Protocol. It's easily one of the most talked about Layer 1 blockchains right now, and developers and investors are constantly debating its potential. But beyond all that hype, what is actually going on under the hood with this network? Today, we're going to unpack the tech, the shifting narratives, and the very real market forces that are driving its adoption.
And honestly, that brings us to the massive question that's currently living rent-free in the minds of tech investors. Can Near Protocol actually return to its massive all-time high of $20.44 in the next Altseason? I mean, everyone wants to know. Does this network have the technological stamina and the market positioning to reclaim those dizzying heights? To answer that impartially, we've got to look past the pure speculation and really dig into the data.
Near Protocol, Layer 1 blockchain infrastructure. Okay, let's dive into this. As a Layer 1 blockchain, Near's main goal has basically always been to serve as a faster, much cheaper alternative to the big guys, like Ethereum. And to pull this off, it relies super heavily on sharding. Now, as you probably know, sharding is this clever tech that splits the network's database into smaller, much more manageable pieces. This lets it process a massive number of transactions all at the exact same time. The ultimate goal here? Supporting literally millions of concurrent users without the network lagging or, seeing those gas fees totally spike out of control.
Because, let's be real, Near wasn't just built in a vacuum, right? It was specifically engineered to solve those classic blockchain trilemma pain points. We're talking about high transaction fees, sluggish speeds, and just a generally poor user experience. Historically, these issues have totally bottlenecked mass adoption for things like decentralized apps, DeFi platforms, and blockchain gaming. Near's sharded infrastructure basically provides the heavy horsepower needed to actually run these complex apps smoothly. Moving on to Section 2, the previous peak, a look back at the 2021 to 2022 bull run.
Now, to truly grasp the sentiment today, we really have to rewind back to that euphoric period when investors were just desperately hunting for Ethereum alternatives. That frenzy led directly to this exact number, $20.44. Back in January of 2022, billions of dollars were flowing freely into scalable blockchains, and Near caught a massive wave of that liquidity, cementing itself as a top-performing asset in the entire market. It was a wild time.
But then, well, the bear market arrived and did what bear markets do best. They completely wiped the slate clean. Today, the landscape is so much harsher. Look at these heavyweights. Near is battling head-to-head for market share against Ethereum, Solana, Sui, Aptos, and Avalanche. It's a really tough crowd. You couple that fierce competition with liquidity consolidating back into Bitcoin, and it becomes pretty obvious why reclaiming those past highs is just an absolute uphill battle.
Which brings us to Section 3, the AI narrative advantage. Infrastructure for artificial intelligence. So you might be wondering, how on earth does Near stand out in that crowded room today? Well, by pivoting. They are aggressively positioning themselves as the premier infrastructure for AI-powered applications. And this whole strategy really relies on 4 specific catalysts. They've got strong, scalable tech. They are successfully hijacking the massive AI narrative. They've maintained a stubbornly resilient developer ecosystem, and of course, historical performance, because past top performers naturally attract renewed attention when the market heats up.
But make no mistake, this AI pivot is the true wild card here. As the source material points out, AI-related crypto projects could become one of the absolute strongest narratives of the next bull market. I mean, think about it. Artificial intelligence is completely dominating global tech headlines right now, pulling in trillions in traditional market capital. By bridging their incredibly fast, scalable network with the intense computational hunger of AI applications, Near has basically engineered a really unique, non-legacy advantage for itself.
Let's look at Section 4, Altseason price predictions. Speculative scenarios for the next cycle. Now, before we start throwing numbers around, let me be crystal clear. These are strictly speculative scenarios based on market conditions, absolutely not guarantees. Let's start with a conservative scenario. Say Altseason is kind of weak and Bitcoin just continues absorbing the vast majority of the market's liquidity. The analysis points to the $4 to $6 range here. It's modest compared to its all-time high, sure, but still a really solid multiple from its bear market lows. Okay, but what if market conditions actually improve? That's when we enter the bullish scenario. If we start seeing a shift where Ethereum begins to strongly outperform Bitcoin, which usually triggers broader momentum and confidence across the whole altcoin market, we could easily see Near hit the $8 to $12 mark. That would represent a really substantial upward move, showing solid recovery even if it keeps it safely below that historical peak.
Now, let's say the stars completely align for the network. We hit the strong scenario. This basically requires a major, widespread alt season to kick off, coupled directly with that AI narrative heavily gaining traction and just totally dominating crypto headlines. In that kind of environment, NEAR could potentially revisit the $15 to $20 range. But remember, this scenario relies extremely heavily on their pivot into AI infrastructure, paying massive dividends when it comes to user and developer adoption.
And finally, we have the extreme bull market scenario. This is the scenario where the network actually breaks above its previous all-time high of $20.44. For this to even be a possibility, we would need to see a hyper-aggressive, euphoric bull market where global adoption just accelerates rapidly and AI-related crypto projects become the undisputed dominant force in the entire industry. It is so vital to note that this requires exceptional, absolute, perfect storm market conditions. It should firmly be viewed as the highest risk, lowest probability scenario on the board. Which leads us to Section 5, Market Risks to Consider, the sobering reality check.
Because understanding the potential upside is really only half the equation, right? We have to impartially assess what could actually go wrong here. First up, that fierce Layer 1 competition we mentioned earlier, it is only getting faster and cheaper every day. Second, extreme market volatility is just a constant threat in this space. Third, regulatory shadows are definitely still looming. And lastly, total dependence on broader crypto sentiment. Remember, even a fundamentally incredible, technologically superior network will absolutely bleed if the overall market weakens. NEAR is not immune to gravity, folks. So, we circle right back to where we began today. Can NEAR reach $20 again in the next alt season? Well, you've seen the mechanics of their sharding tech, you understand their strategic pivot to capitalize on that massive AI narrative, and you are fully aware of the intense competition and market risks standing in their way. So, is the combination of strong tech, a growing ecosystem, and AI hype enough to propel it back to its all-time high? You've got to weigh the data, consider the scenarios, and make up your own mind. Thanks so much for joining me on this deep dive. Stay curious, keep analyzing, and I'll see you on the next explainer.